President Donald Trump leans hard on Republican senators to pass the Tax Cuts and Jobs Act. Will his pressure on them pay off? New home sales surged to a 10-year high in October, and third quarter GDP is revised higher. Will this data help our portfolios? And the U.S. markets continue to look stronger on the relative rotation graph. Caution! What's in your portfolio? Here's what's moving the markets and your money. I'm Charles Brown. It's Wednesday, November 28th, and this is CB3 on 3. 3 on 3 covers current social and political, news and fundamentals, and technical analysis influences on market behavior and thus your money. Together, these influences determine the movements in all the portfolios we manage. Here's what we're seeing this week. In social and political events, President Trump flies today to Missouri in an arm twist to Claire McCaskill, a Democrat senator. He wants McCaskill and a few other Democrat senators to vote yes on the Tax Cuts and Jobs Act. Mr. Trump realizes a winning vote will be razor thin now, with several Republican senators stonewalling until the very last hour prior to tomorrow's or Friday's vote. Trump likely needs a couple senators to cross the aisle to help his cause. Here's my take on the political implications for our investments. Last week, as I was filming this program, the Dow and S&P 500 were hitting another new intraday lifetime high. Today, the tech sector is selling off and dragging down the NASDAQ with it. There is an undercurrent that 2 or 3 Republican senators, Collins in Maine, McCain in Arizona, and Johnson in Wisconsin, could cause the bill to fail in the Senate. If tax reform fails, we likely are all in for a rough ride heading into Christmas. I'm watching this vote progress tension almost every hour this week, and will let you know a lot more in next week's episode. In news and fundamentals events, the fundamental data in the U.S. economy is really exciting this week. The Consumer Confidence Index jumped to 129.5 in November from an upwardly revised 126.2 in October. The November reading is the highest since December 2000, highest in 17 years. Following that was new home sales jumping 6.2% month over month in October to a seasonally adjusted annual high of 685,000. That is the highest seasonally adjusted rate in a decade since October 2007. And then October pending home sales, those that have not closed yet, rose 3.5% versus an expected 0.6%. And finally, the GDP report provided today encouraging news that the third quarter real GDP growth was revised upward from 3.3 rather than 3.0. The U.S.'s economic output grew at its strongest pace since the first quarter of 2015, despite the disruptions created by those 2 hurricanes earlier this year. For the record, we didn't see 1 quarter of 3% GDP growth during the previous administration, and now we've had 2 quarters of 3% plus growth in Trump's first year in office. All these numbers are fantastic for the 2018 outlook. The 2018 economic outlook for U.S. growth is in first place among the world's developed economies. Here's my take on the fundamentals for our investments. Folks, this is pretty simple. The data continue to roll in here as 2017 draws to a close, and it's positive. While this kind of economic data usually does not immediately move the stock market, it has done so this year, and it also sets a tone for investors and portfolio managers like myself as we align your investments to best be positioned in 2018, which is now just around the corner. In technical analysis, the U.S. markets versus the world markets relative rotation graph, or RRG, continues to strengthen. The NASDAQ has now moved well into the green or leading quadrant as it joins the Dow Industrials. It's always encouraging when a sector recovers from being in the weakening quadrant and then heads back north into the leading quadrant. The Russell 2000 small cap and the S&P 500 in the blue or improving quadrant are also continuing to move northward on the compass. Here's my take on technical analysis for our investments. This rotational pattern is what we want to see for all 4 major indices, which is why I am not concerned when we have an occasional sell-off day like we did in the tech sector. November and December are seasonally strong performance months for the stock market, and November certainly has been that this year. Unless the U.S. Senate fails on the tax reform vote and thus puts a lump of coal in our stocking, we should be in good shape heading into December. And that's CB3 on 3 for Wednesday, November 29th. What's in your portfolio? If you don't know, you should. If you want to know, we can help. I'm Charles Brown, and at CB3 Financial Group, we don't just manage your assets, we become one of them.